What's up, guys? This is David, aka Reverse Long, and today I got Steve Nison on the podcast. So, Steve Nison, I've studied all his books, the Japanese Candlesticks, the other Japanese Candlesticks books, Candlesticks course, you name it. And it's just always fascinating for me to go all the time and study like the genesis of the candlesticks. So I reached out to Steve's team and I got a hold of Steve, and it's great to have him on. And yes, Steve. If you want to give a brief background on yourself in case people don't know.
Yes, I was the one to reveal candlesticks to the Western world. So, yeah, interesting when I meet people and they ask what I do, I say, "You ever see stock market charts with the rectangles?" And they say, "Yeah." I say, "That's because of me." They say, "What do you mean?" So, yeah, it's amazing. Before my book came out in, I think it was 1990 or 1991. Back then, I was working for, what was it, Merrill Lynch, uh, in their futures. No, it might have been Shearson. So many different firms I worked with because companies merged, but I worked in their futures research area. So originally, my first edition of the book in 1990 was with candlesticks for futures. But then, as more people started to use them in the equity markets, I revised the book in 2001 to include more equity charts. So, yeah, essentially a very brief background about how I found out about the candlestick charts. I was working at Merrill Lynch, and there was a broker down the hall. She was Japanese, and I happened to be in her office, and she had this really voluminous chart book sent to her from Japan, and obviously they were all in candlesticks. So I asked her what these were, and she told me this is the traditional way of Japanese making their charts. So I've always done something beside my main job, but my main job back then with Merrill and E.F. Hutton, for you old timers out there, when Hutton talks, people listen, Shearson and all that, was giving trade recommendations to the brokers. So, um, so I figured, maybe this would help me give better trade recommendations. So I found an American who spoke Japanese, who was also a trader, who happened to be going to Japan. And I told him to buy every book he could on candlesticks, and I paid him to translate all of them. And it took him about a year to do that. Then it took me about a year to kind of put everything together in a logical order and figure out. I had to make decisions like they would have sayings like with a window is the same as a gap in the West in technicals. And they would say, oh, a window can be momentarily broken, but it's still valid support or resistance. And I had to figure out what do they mean by momentarily. So I looked through, many, many charts. And to me, that meant it had to close above or below the windows. So initially, from 96 to 2000, I was giving my recommendations to, I worked for private companies. I did seminars for Shearson and JP Morgan and all that. And most of my clients were actually specialist firms on the NYSE. I don't even know if they're around anymore. So it's been so many years. And I'd give I'd give major support and resistance areas because for the specialists, they wanted to know where they'd have to step in or not. But anyway, so slowly but surely, pretty much all the charts converted to candlesticks. So,
Wow. So in Japan, they were using candlesticks for like the longest time for the rice markets. Is that correct? And they were
yeah, well,
like,
back then they didn't have. Back then they only had open. They had open and high low. They didn't have openings. They had high, low, and closed. But the Japanese used technicals back in the 17th century to kind of predict the price of rice. And then they shifted over to, they used bar charts. And then probably in the late 1800s, early 1900s, they shifted over to candlestick charts. And the Japanese use all the books I had translated all use Western technicals also. So that's one of the things we bring out in our education, the importance of combining technical candlesticks with traditional Western measuring techniques, support and resistance, and so forth.
gotcha. And what would, okay, so before you brought the Japanese candlesticks here, what was the primarily used in the US markets?
Just the old bar charts, if
The old
anybody
bar
knows what
charts.
they look like
Okay.
anymore. Yeah, yeah.
Yeah. So for you, what gave you that idea, that like conviction that okay, I gotta get everything I can on Japanese candlesticks? Because that's a major conviction to have to do that.
Right, right. And people say I should be convicted, but that's something different. Anyway, uh, So what happened was I was doing the research and I started to apply these strategies to my trade recommendations to the brokers. I didn't let them know that. So my trade recommendations were getting better and better. In fact, one of the slides I used to show is I'd have, you'd have all the analysts, maybe there were 20 analysts, and I had the best P and E because, and I tell the audience that's because of the candlesticks. So that gave me the incentive because it was a big financial commitment. It was also a big time commitment. Net altogether was like 2 years at nighttime because I was working during the day at brokerage firms, and luckily I would commute on a bus and take a nap coming home. So I would have the energy to work at night. But I've always done other things as a backup. So even though during the day I would be working at Merrill, whatever it is, at night I was a tax preparer. I became a CPA. So I was always used to doing two things during the day. So this was just another addition to doing that. So, and it's funny how one sentence can change your life. I mean, I'm sure it's true with a lot of people, but I did a 2-page article in Futures Magazine back in 1989. It became really popular. That was the first thing written in the West, pretty much, about candlesticks. And Futures Magazine, I don't think it's around anymore. So anyway, I was on the train in New York on the subway, speaking to my friend. I said, "Do you think I should write a book about this? It's a lot of work and all." He said, "Well, if you don't, somebody else might." So I said, "Yeah, that makes sense." So yeah.
Now, what was the initial like reaction towards okay, this new thing? You're like the pioneer, right?
Mm-hmm.
And so what was the initial reaction of because people like it's like they got to learn something new again, you know? So
Yeah.
like what was that like? Like okay, you're introducing candlesticks now. And like what's crazy is now everybody uses it.
Right, right. Well, one of the first decisions I had to make, because it was new, I had to decide if I wanted to use the Japanese terms, like a hammer, the actual Japanese term, and I don't speak Japanese, so is Takori, and I'm sure not. So one of the things I had to decide about is because, as you mentioned, was new. Do I use the Japanese terms for the pattern or the signal, or American English translation? So for a hammer, it's actually called Takori, Takuri. But I figured this is so new. Why have people try to remember the Japanese name? So I used all the translations. Uh, but in a sense, I was kind of lucky because it it's new, but it's not new. It takes the same data as the bar chart, open, high, low, and close. It's just drawn differently.
Yeah.
So it's not as though you have a different concept. It's just much more visual. You could see whether it's the bulls or the bears are in charge. So that was one hurdle I didn't have to overcome. And also, there's no disadvantage to using them because it gives you the same ability to use all your favorite Western tools, moving averages, trend lines, oscillators, whatever it is, because the candle chart uses open, high, low, and close. So you're not giving up anything at all. You're only gaining another visual representation of what's happening between the bulls and the bears.
I see. So your performance improved when you started to implement the Japanese candlestick. So it was like with technical, I guess it was just more precise and more cleaner to read. Like, what was the main thing that separated that had you perform better with it?
Because I was able to get earlier turning signals.
Okay.
Most Western tools, and not that I'm not disparaging Western tools, moving averages, trend lines, but those are lagging indicators. And with the candle charts, you can have a potential, and I underscore the word potential, reversal signal in 2 or 3 sessions. And so you have a bullish engulfing pattern and you have a potential reversal signal in 2 sessions, where if you have to wait for a moving average crossover, what the Japanese actually call if there's a bullish crossover, they call it a golden cross. And if it's a bearish crossover, they call it a dead cross. But whatever you use, most Western signals are lagging indicators. So
I
you
see.
get early reversal signals with the candles. But one thing I do underscore is to use candles in combination with Western tools. So whatever your listeners or viewers' favorite Western tool is, I would continue using that and just see if you get a candlestick confirming signal.
Yeah. And the Japanese, how did they come up with it? Because this was in the 1700s. So how did they come up with it to get it? So were they looking? Did it just happen by coincidence that it just worked well in the U.S. markets, or did they like were they trading markets like stock markets with this already?
Yeah,
Did
well,
they? Yeah.
Mhm. Yeah, so the 17th century was the rice markets. I don't know. I mean, I did my research so many years ago. I don't remember if they had a stock market. They in the late 1800s, early 1900s. Yeah, I don't know what they were trading. Maybe they were still trading rice futures with it, but obviously, the fact that they did have bar charts and then converted to candlestick charts, there must have been a reason for that.
Yeah.
Probably get early reversal signals, but I have no idea how well it worked or not. Mhm.
And what about these days with the like with the computers and we got so much technology now. Did
Yeah.
you could you fathom that, like how that was going to play out back then?
Who could? Yeah, who could? Who could? 30 years ago, who would have even thought of computers? So yeah, yeah.
So, but like these days, do they move too fast? Or they still everything that you thought about early on, it still works as seamlessly, or does it or work even better now with the computer? Like, how do you see that?
Well, I think I don't know if it works better or not, but it's still seamless. They seem to work in a lot of markets. What's nice, another reason the candlesticks, I don't want to say took off. It took a while for everybody to use candlesticks, but they work in all markets and all time frames. If you have an open, high, low, and close, you can apply them. And of course, nothing is 100%. One of the reasons my books became popular early on is because I had a Japanese proverb in front of each one, which was a challenge because there was no internet. So I had to buy books on Japanese proverbs and pay somebody to translate the proverbs from Japanese to
Wow.
English. But anyway, one of the ones is even monkeys fall from trees. And the press liked that. The press picked up those cute quotes. And the reason I bring that up is because one of the things we teach at our website, and I'll give you a link later for your
Sure,
listeners
sure.
and viewers to get free information, is the importance of knowing when to get out, risk management. When I show that, I mentioned that slide. Well, I'm not going to, I don't have any slides today, but when I show that chart of me having the best P&L, I had more losses than wins, but that's because I knew how to use protective stops, and that's really key.
Yeah. And what do you think these days with like the time frames of the candles? Like when you first started, did you think about certain time frames, like daily time frame or
Yeah,
altogether? Because for
yeah,
example, these days
yeah,
they have like 10-second candles. I don't know if you noticed.
there could be, but I would never use them.
Yeah.
I really don't look. I look mainly at daily charts, and sometimes an hourly when we do our analysis. Each day we do the major markets, and we talk about our analysis on the major markets. Uh, when there's big swings like we have recently, I'll have a daily chart on, but then I'll go to an intraday chart, a
Hmm.
30-minute or 60-minute chart to get what I call hidden support or resistance areas. So, but longer term, I'll use weekly for my own investing. Uh, I, I, I don't trade as much now or shift around now because I'm older now, so I'm more into passive, uh, the ETFs, the S&P and all that, and diversifying. But when I was more active, trying to time the market with uh, for my investments, when I should get in and out of a major portion of my equity market and shift more into maybe fixed income, whatever it is, or cash, I would look at a weekly chart. But the day-to-day stuff, I mainly look at daily, but there are many people who use intraday candles, and your client, your viewers, your listeners, they may have a better sense of what signals work better. They may look at a 5-minute chart of whatever it is, Apple. I don't do that, and they'll see which candle signals work or don't work.
I see. Now, the way the candlesticks are read, I mean, it's clear just to read them the way they are and all that. But these days we have a lot of like algorithmic trading. Now, what's your take on that? How the algorithms work the candlesticks in a way, and like how like the price action of the candlesticks with algorithms is like, do you think in the future there might be another way to read the candlesticks, like another like the way you found Japanese candlesticks, maybe there's another version that's able to read the algorithmic price action better than what currently is, because like it just performs a lot different with the speed, it seems like with algorithms, what
Yeah,
are your thoughts on
yeah.
that?
No, no, I have no idea. No, sorry.
Gotcha. And now the books, um for someone that wants to learn the candlestick patterns and learn the basics, like for me, I really enjoyed that book that you wrote about the course, the candlestick course. And
Right. That was my last. Mhm.
yeah, so like so like okay, so how many books exactly do you have on candlesticks? I know you have that one with the black cover, the original one, and then the one with the red cover. Is that the newer edition? Is that the
No,
one?
the gold card. I think okay, the original one. You might, if you have that, it might be worth money. Of course, it was
Okay.
okay. I'm just kidding. Um, Let me see. I have to remember the black one was the original one, probably from 90, whatever is 91, or maybe even 1989. Then the one 2001. They're both called Japanese candlestick charting techniques. But the red one, that's what the one 2001 also includes equities. And then my second book was called Beyond Candlesticks,
That's the one.
which
Yeah,
goes
okay.
over Hougaard, and that's much more complicated. That
Uh-huh.
really never took off. I mean, people use it, but has Renko and Kage. There were other Japanese. They're a little longer term oriented and much harder to explain than candlesticks. And then my third one is the course book. So the idea is uh, you should have a basic education on candlesticks, and this way you can kind of test your knowledge with the course book. And that's a green cover, and that was only made in I think paperback. But to the universality of this, is we have students in 85 countries, and my books have been translated to 21 languages so far. So it's one of the other proverbs I use is the tone of a bird song is the same everywhere. And just like math is math everywhere, the same thing. You could use candlesticks anywhere as long as you have an open
Yeah.
high, low, and close.
Yeah, that's the beauty of it. So, and it goes for multiple markets. I mean, you got
Hmm.
the equity market, you got futures, forex,
Options that work great for options.
options. Yeah, they're
Yeah,
just
yeah.
great
For
for everything.
timing, for options, obviously you have to look at other things like implied volatility and all that. But what, as important as implied volatility is, far much more important, far and away much more important is trend. If the
Mm.
trend is changing.
Now, what is your favorite candle? Do you have one?
My favorite candles are the ones that intuitively tell you that the market is really reversing at a horizontal support or resistance area. For example, there's a bullish engulfing pattern where the market's in the downtrend, and that's important. A lot of people they'll go to the internet and they'll look at what the pattern is, but a lot of stuff is wrong. That's why we focus on our education. So with a bullish engulfing pattern, the market has to be in a downtrend, and it's a green candle, real body wrapping around a red candle, or depending on the charting package, you might have black and white. But that's showing you, especially if the green candle is much bigger than the red real body, it's showing you the bulls are really taking over. And if it's at a support area, and equally important if there's a good risk reward. A lot of people forget about that. We have what we call our magic three, and three is candlestick signals for one, if it confirms a Western technical for two, and then you always have to look at trade management, risk reward, stop element, and all that. So whereas you could have another path, so I like those where it shows that one has taken over from the other. The bulls have taken over from the bears, or the bears have taken over from the bulls. Whereas you have another pattern where it's not so much a pattern, but a doji, where the market is equal, the open and close are the same. Most people are familiar with that. That to me is not potentially a strong reversal. It just shows the market's in equilibrium. So one of the misunderstandings is that if the market rallies and there's a doji, it's a bearish signal. That's not true. uh, it just means that the trend has gone from up to neutral because there's a balance of forces between the bulls and the bears. Whereas the market's going up, and then you have a bearish engulfing pattern where red real body wraps around the green real body. That's showing you the bears are really taking over. And one of the things that you could do is use many of these candle signals as support or resistance areas to let you know if you're wrong. So if you have a bullish engulfing pattern, if the market closes under the low of the bullish engulfing pattern, you consider that a break of support.
Gotcha. And so a lot of the people that watch this podcast, the Friendly Bear, they're the bears of the market. So
Mhm.
you mentioned some bear formations of the patterns. What about like what are the go-tos? Like for example, me as a short seller intraday, a short seller. I'm looking like, the gravestone doji,
Hmm.
or the inverse hammer.
Hmm.
Right, the inverse hammer, or is it the hammer? I'm
It's a
brushing
shooting
up.
star during a shooting
The shooting
star.
star. Okay.
Yeah, yeah. See, one of the things we bring out is that like I said, a doji to me would not be a great bearish signal. I mean, so if you have a tight stop, that's fine. But if you have a doji confirming a horizontal resistance area, may as well, you can take a shot on the short side and just have a protective stop above that resistance area. Uh, and the shooting star, again, it's a nice signal. It's showing you the market rally, but couldn't close. It closed a lot lower. Uh, and but to me, the more important ones, I'll tell you the pros and minuses. The more important ones are like the bearish engulfing pattern where a red candle wraps around a green wheel body. The downside with that, and this all depends on their trading style, is ideally you should wait for a close or nearly the close to complete the candle signal. So by the time you get a bearish engulfing pattern at the end of the session, the market may have moved down already, and you might have more risk because of that. So one of the things the candles don't do is give you price targets. So I'll look at normally recent lows or highs. So let's look from the bear position. I'll look at a recent major low, and that'll probably be my target. So you have to look at the risk reward. One little trick you could do with for example, the bearish engulfing pattern, if they're watching the market intraday, you don't have to wait for the close of the day to see if there's a bearish signal. You could do intraday. So let's say the part early in the morning, you get a bearish engulfing pattern. All right, that's an early signal, and you could think about initiating a short at that time and just put a protective stop. This way, you don't have to wait for the close. And one of the things that we do is we can initiate part of the position based on the intraday, and then if the market closes and confirms the bearish engulfing pattern, assuming it's a good risk reward, you could add to your position.
Awesome. And so you're saying, just that's the beauty of candlesticks. They can apply to like multiple different time frames. It's not
Right,
just like the daily, or just you got to wait till the end of the day. You can take
right.
so what you're saying is you just have the protective stop in case the candle revert, like, becomes something else. You
Right.
know?
In other words, if it didn't work out,
Yeah.
if it didn't work out, there's always and my opinion, I mean, this is something I've always done, is whenever I did a trade, I would set protective stop when I did the trade because that's when you are less emotionally involved with the market. A lot of traders, and I know people. I worked with somebody at back then at EF Hutton, and he didn't play stops. And if the market was, I couldn't tell if he was losing or making money. He was just totally stone face, and he was able to be objective enough to uh, put a stop in while he was in the position. But
Mm.
most of us, we second guess ourselves. Oh, it's I'm going to let's say we're shorting. I'm going to cover it now, and I know it's going to sell off after I cover it. I mean, or it's going to have to go more in my direction. We rationalize. We don't like being wrong. So the time you're most objective is when you do the trade, put in a stop. That's what I do. Mhm.
Gotcha. And what about the like volume correlating to the candle? Like,
Yeah.
is that like a big deal? Like, for example, if you have a candle with a strong
Mhm.
body, but there's
Mhm.
a weak volume, it kind of just it happened almost by accident. It didn't
Mhm.
really by coincidence. It like that strong bar because it's really not strong. It didn't have much
Right.
demand to push it.
That's a
So how
that's a
would you
good point.
relate?
Yep. 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 Yeah, I'll have volume on the bottom of my charts. Yeah, that's a good point. So you want to see ideally good volume on the green wheel body. Well, we're talking bearish on the red wheel body compared to the green wheel body. But volume is not as important on the downside. Markets. The saying is markets could fall of their own weight, but they need buyers to to get the market up. So to me, volume is less important on the bear side. Markets fall of, like I said, markets fall of their own weight, and we know for options, especially on the bear side, implied volatility picks up a lot faster on the bear side than it does if the market rallies. So a lot of advantages to selling, definitely. Mhm.
Great. And one of the last questions here, because I know your time is limited. Okay, so the color of the candles. I know some platforms they put the candles black and white. I forgot in the
Mhm.
in the book it's black and white. But then
Right,
there's
right.
red and green. Is it like a psychological thing if you see green and
No, it's
red?
just on their charting system. I used to use black and white, but it looks better with green and red. It really
Yeah,
doesn't matter. So I think based on what I see everywhere, pretty much it's green and red. I don't think I see much black and white anymore. I don't
yeah.
know. Yeah.
Cool.
So
So
whatever
Steve,
charting system. Yeah.
absolutely. So Steve, where can people find you? You mentioned your website, and yeah, if they want to get learn more about candlesticks besides your books, I recommend all Steve's books,
Thank you.
especially the
Thank you.
candlestick course. That one I
Mhm.
read 3 times, and I was able like
Mhm.
to memorize them. Like it really
Okay.
helped.
That's
Yeah,
great. Yeah. Yeah. So anyway, yeah, it's not only learn about candlesticks, but learn correctly because there's so much bad information out
yeah,
there.
yeah.
Uh, but anyway, our website is Candle Charts, www.candlecharts.com. And we made a special link for you, /welcome. So it's candlecharts.com /welcome. And you're going to get some free information. And what we also did was, as a bonus, I almost said added bonus, but that's kind of redundant. As a bonus, you'll get a free consultation. So it's
Awesome.
www.candlecharts.com /welcome, and get a lot of free information and a consultation. So,
Awesome. Well, I'll have all that in the show notes, and
okay,
thanks, Steve, for taking the time. The legend of technicals are over here. So you
great.
brought the whole. So when you're looking at candlesticks, it's just the
Yeah.
guy that brought the candlesticks to us.
Okay,
It
great.
really
Thanks.
is.
Okay.
Wow.
Okay.
Thank you,
Very nice
Steve.
speaking to you. Okay.
And
Thank you.
yeah.
Okay.